Well, I'm now joined by Nedbank's Nerina Visser. Great to have you with us, Nerina.
Pleasure.
A lot of people were saying that these lawmakers obviously couldn't allow it, but as the time dragged out, was there a little doubt in your mind that this deal would be struck?
No, the doubt was never really there, and maybe we're a little bit naughty for assuming that they will necessarily reach a deal. But you know, they've done this so many times, and of course with the deal that they've now reached, we're going to have an action replay again in January, and you and I will probably sit here again in January and have exactly the same conversation. And I think it's actually quite reckless of US lawmakers pushing this thing to the brink every single time, and it really is quite a dangerous game that they are playing. They're obviously trying to score political points and using the US economy, and in large part almost the world economy as well, as their ball that they're playing this game with, and I think it's quite a dangerous game that they are playing.
Well, the Republicans don't like Obama's healthcare, Obamacare, so you think they'll keep on trying to push the point whenever there's something significant that has to happen. And then what are the implications of that for the world economy? Will there eventually be some kickback from other nations, but I don't know exactly how?
Well, I think every time that this happens, what necessarily happens is that the integrity of the US is being undermined. Not only just of the US as the world's biggest economy, but also in particular the US dollar as the reserve currency of the world. And I think that is probably the biggest damage that the US is doing to themselves, because every time that something like this happens and they're really holding the rest of the world hostage in terms of their actions, they're pushing the rest of the world closer and closer to an alternative to the US dollar as the reserve currency.
Because right now it's incredible. When something goes wrong, people actually rush into the dollar because that's a safe haven. But that will be very damaging, like you say, if it stops for America itself.
Exactly, and I think we must also understand that although we might perceive it as a safe haven, that is not really the only reason why the money does go into the US dollar. In large part, it's also going there because the biggest owners of US debt is actually the Chinese and the Japanese governments. So they have a serious vested interest in not allowing the US government to default on its debt, and also for the US dollar to completely devalue overnight or too quickly. So when you see this rush back into the US dollar, a large part of that is the Japan and the Japanese and the Chinese, I wouldn't use the word manipulate, but really managing this process so that the value of their own reserves do not depreciate. But what we've seen in recent times is that clearly the Japanese government, and even more so the Chinese, are putting specific moves in place to actually diversify their reserves away, not just from US debt, but in particular from the US dollar as well. And I think the longer the US government continues to play this sort of game, because that's really what it is a game that they are playing, the more they play this game, the more they are actually making themselves less relevant on the world economic stage.
So that special balance may actually tilt. Also, I mean, the fact is that the US now has $17 trillion in debt, which I can't even contemplate. A lot of people say it's even more, and at some stage they will have to go through pain, tighten their belts, let people lose jobs like they are here.
Absolutely.
But then we all suffer, don't we?
Yes, absolutely. So this has got to be unwound in a controlled manner, or else the entire world will suffer. So what this deal really does is that terrible phrase of kicking the can down the road, but that is essentially what they have done. What this does imply is that any chance of tapering or a reduction in that quantitative easing program has definitely been pushed off the 2013 agenda. So we're looking probably somewhere deep into 2014 before we'll see that. That's the short-term good news, because
that's good for us, isn't it?
Short-term. Short-term, it's very good for us and for other emerging markets, because it means risk-on trade is back on. So we've seen money flowing back into emerging markets, money flowing back into riskier trades, which also means into commodities, and that of course is good for the South African economy and for the South African market as well. The longer term scenario is that of course it pushes that $17 trillion and the US debt higher and higher into the stratosphere, and that is where the concern comes in, is that you make it more and more difficult to unwind the situation in a controlled fashion. So whenever this normalization does take place, it's going to be disruptive. So if there's one thing that will be with us for a long time, it is volatility, and that's certainly something that we'll just have to get used to.
Very quickly, it sounds like if you're adventurous, now you should start throwing cash into the JSE, because we know that this is put off, that tapering that everybody was worried about. But I assume that you really shouldn't, because of that volatility you're talking about, unless you're a professional or you really want to take on the risk.
Well, I think one always should get the advice from a professional, but I think your professional investors probably at this stage would be putting more money into the equity market, but in a very risk-controlled and diversified manner. This is a time when equities will perform better than bonds. Equities do like a little bit of more growth. Certainly the accommodative position is good for equities, and it's not really translating into runaway inflation. Also good for equities, especially when we compare equities to bonds. So all round, despite the fact that the JSE, as many other markets around the world, are pushing all-time highs, and a lot of people are questioning the valuations, we still think that equities is not a bad place to be. But you've got to be very diversified. This is not a time to put all your eggs in one basket, but you also can't afford not to be invested. So stick with the professionals. That's probably the best way to play
All
it.
right, thank you so much for your analysis. And like you say, I think we'll be speaking again next year, if not sooner. That was Nedbank's Nerina Visser. Well, it's great to have